Okay. What's good, my young G's? Pell Block 101, home of value investing in disruptive innovation and tech. I know it's been a while, life's just been life, innit? But I'm back like badass. Yeah, if you know, you know. Yeah, for those that are new, my background is in accounting and finance. I've got a master's with distinction in it. Yeah, SEMA part qualified. I've got like one exam left to sit. I just can't be asked to do it. Yeah, it's been outstanding for years now, right? But been in finance for over 10 years. I've worked for startups, I've worked for corporations. I'm currently working as an investment analyst for a regional property developer in the UK that specializes in affordable housing. So yeah, I legit do this for a living. Yeah, I'm really about this. Right. With that being said, this is not financial advice. It's for entertainment purposes only. Yeah, I don't need you guys trying to sue me if you lose money, right? But I believe I'm trustworthy. Yeah, more so than a lot of the scammers and grifters on here. Okay. So here's a question for you, right? Have you ever seen someone on TikTok or Instagram showing off their trading profits and thought, you know what, I could do that, yeah, or I want to do that? Or maybe you've heard people talk about investing, but you're not really sure what the difference is. Yeah. Well, today we're going to break down something that could literally change your financial future. And I'm going to show you why your age gives you a massive advantage that most people don't have. But first, let me show you something that's going to blow your mind about the power of starting early. Yeah. Where to even Gwen Stefani. Yeah. So let's do this. Okay. Mm-mm-mm. So check this out. And I want you to really pay attention to these numbers because they're going to change the way that you think about money. Yeah. If you start investing just £100 a month, right? That's like £25 a week. Yeah. Less than most people spend on delivery or Uber Eats. Yeah. Like I know I spend, I've been known to spend like £25 in one day on Uber Eats. Do you get me? Yeah. But let's say you invest just £100 a month at age 20, right? You'll have over 300K, yeah, by the time you're 60, right? But here's the crazy part. If you wait just 10 years and actually start at 30 years old, that same £100 a month, you end up with only 140K. Yeah, that's less than half. Do you get? This isn't about being good at math or picking the perfect assets. This is purely about time. Okay. And right now, this is the one thing that you have more of than anyone else watching financial videos on YouTube. Yeah. But here is where it gets confusing for a lot of people your age, right? So when people talk about making money in the stock market, right, they're actually talking about two completely different approaches, right? Think about the differences between Mo Farah and Usain Bolt. Both are incredibly successful athletes, both made millions, but they have completely different training schedules, mindsets, and strategies. And let's be honest, like if we're being objective, Bolt probably has more popular appeal. Yeah. He's flashier, more exciting to watch, gets more attention on social media. But that doesn't mean that his approach is better or worse than Farah's approach. Yeah, they're just different. Investing is like Mo Farah. Yeah. It's like Mo Farah's approach. You're building endurance over time, staying consistent with your training, and the real payoff comes after years of steady work. Right. Trading is like Bolt's approach. It's explosive, requires incredible precision and timing, and you're looking for those perfect moments to perform. Both can make you successful, right? They require completely different skills, different personalities, and different levels of commitment. I needed water. I needed water. Cool. And just like in athletics, the time commitment for each is totally different. Now, this is where most people get confused. When I say investing, I'm talking about buying an asset and holding it for years, sometimes decades. Okay, we're talking minimum 3 to 5 years, but smart investors think in terms of like 10, 20, even 30 years in some instances. Trading is a complete opposite. Like you might buy a stock in the morning and sell it in the same afternoon, like that, or hold it for a few weeks at most. Some day traders never hold anything overnight. Yeah. Now, you might be wondering why 3 to 5 years specifically for investing, right? There's actually a really smart reason for this. It's something that they don't teach you in school, yeah, but every business owner knows this. Okay. So when companies want to borrow money or get investors, they don't show a plan for the next month. Yeah, they show a 3 to 5 year business plan. Why? Because that's how long it actually takes for most businesses to become profitable. Yeah. If you look at Amazon, for instance, everyone thinks of them as this massive success story, which they are, but they actually lost money for their first 7 years. Yeah, Tesla, same thing. Yeah, most successful companies spend the first couple of years investing in growth, break even around year 3, and then start making real profits in years 4 and 5. Right. So when you invest in these companies, you're basically betting on this business cycle. Okay, that's why smart investors think in 3 to 5 year minimums. Now let's talk about the reality of trading. So I'm gonna give you a statistic that might shock you. Like obviously, if you've heard it already, then it won't, But if you haven't, yeah, I want you to hear it from me rather than from finding out the hard way, like a lot of people do. Yeah, a lot of people think they will be that 10% when really they're the 90%. Yeah, but studies consistently show that around 90% of people who try active trading lose money. Yeah, 9 out of 10. You get a better chance of your wife not filing divorce papers. You know what the divorce rates are like at the moment, in it, but I digress. Yeah, this isn't because these people are stupid or lazy, although that can be the case in some instances. Trading is genuinely difficult. Like it requires incredible discipline, emotional control, and honestly a lot of capital, yeah, to make it worthwhile. Most people who are successful at trading treat it like a full-time job. Yeah, they don't treat it like a side hustle. Yeah. And just speaking of treating it like a job, let me show you a math problem that might surprise you. Yeah. So here's some math that nobody talks about on social media. Let's say you've got £1,000 to trade with. Yeah, you got a grand in your account, which is more than most people your age can spare, if we're being honest. But let's say you're actually good at this, yeah, and you make a 2% profit on a trade. That's £20 effectively, right? But here's the thing, that simple 2% trade probably took you like 3 to 4 hours of research, yeah, watching charts, timing your entry and exit. Yeah, so you just made £20 for 4 hours of work, essentially. Yeah, that's £5 an hour. Yeah, in the UK, that's not even minimum wage. Do you know like that? You could literally make more money working part time at most places. Yeah, and remember, this assumes that you were successful. Yeah, imagine if you lost 2% instead. Now you're down 20% and still spent 4 hours on it. Do you know like that? But the biggest problem isn't even the math, it's the lies that you're being told on social media. Okay. Most of what you see on Instagram and TikTok about trading is complete BS. Yeah, these influencers, yeah, they show you their winning trades, okay, but they never show you their losses, right? Almost never show you their losses. It's like a basketball player only posting videos of their swishes and never their misses. Yeah, although some will show you their misses, especially if she's a baddie, like that. Like those lifestyle posts showing someone on the beach with their laptop, claiming they make thousands a day trading. Yeah, most real traders that I know, they're stressed. Yeah, they're stressed out, sitting at multiple monitors for 10 to 12 hours a day straight. Do you know like that? It's not glamorous. Yeah, even at the moment, I'm using 2 screens right now. That's why my eyes keep moving. Yeah, I've got one eye looking at the presentation and the other eye looking at the video. Do you know what I'm saying? Like if you think about trading, you probably got one eye dedicated to charts, right? Another eye dedicated to news. Do you get? Here's the part that's gonna blow your mind though. Think about it. It's a lot easier to sell courses on trading than it is to actually trade. If I create a course, yeah, and I price it at 2K, then mark it down to 1K, 50% off for a limited time only. Yeah, because everyone loves feeling like they got a good deal, like that. And I sell that to just 20 people. That's 20K. Yeah, that's 20 racks in one course launch. Yeah. If I sold it to 50 people, that's 50 racks. If I sold it to 100 racks. Do you get? Now compare that to trading. Yeah, to make even just 20K trading, if you're making what 2% per successful trade, you need to successfully trade, yeah, $1 million account. Okay, most of these influencers don't have anywhere near that much capital. Yeah, but they can easily sell 20 courses. There's a sucker born every minute, man. Just don't be one of them. Here's a rule of thumb, right? If someone is spending more time making content about trading than actually trading, that should tell you something about where their real income comes from, right? Let me show you a real example of what the difference looks like, right? So if we're using Nvidia as an example, because everyone's been hearing about them with the whole AI boom, okay? If you had bought just 100, sorry, not 100, 1,000, yeah, 1,000 worth of Nvidia stock, yeah, 5 years ago, and just held it. Okay, did nothing, didn't panic sell during the dips, didn't try to time the market, just held it. Yeah, you'd have almost 14K today. But if you try to trade Nvidia over those same 5 years, in that same 5 year period, buying when you thought it was low, selling when you thought it was high, trying to time all those AI related news events, studies show that most people who try this actually underperform just holding the stock, because they end up buying high when everyone's talking about AI and selling low when there's bad news. Yeah. And here's the crazy part. Yeah. Nvidia has some massive dips along the way. Like if you were trading, you probably would have panic sold during one of those crashes and missed out on the most of the gains. Do you know, like that? But if you were investing with a long term view, those dips were just nice. Do you get? And I can even show you this on the charts. Let me show you this quickly. Okay, this is Nvidia. I'll just have it up. So where are we? 2020. We're looking at, is it 25th of May? This is roughly around the time, innit? 26th of May. Yeah. 26th of May, closed at 880, right? Opened at 828, went high as 918. Yeah, but closed at 880. Now it's what, 132.56. Do you know, like that? Yeah, you should have just held it, right? Now, if you try to trade, yeah, you bought here, sold there, bought again here, sold there. Yeah, you bought here, sold up here, bought here, sold here, buy here, sold there, try to catch the dip and then sold here again. Do you know what I mean? There's a lot of variance within those trades. Yeah, it's very difficult to do. Like, there's not a lot of people that can successfully trade markets. Okay. And like I said, it requires massive amounts of capital. Yeah, which you just won't have. You probably won't have, yeah, unless you come from wealth. Yeah, but this gets to a fundamental difference in what investors and traders are looking at, yeah, or looking for, I should say. Yeah, so when an investor looks at Nvidia, yeah, they're asking questions like, is AI going to keep growing? Yeah, is Nvidia going to dominate the chip market for AI in 5 to 10 years? Yeah, how's their competitive advantage? What about their research and development? They're trying to figure out if Nvidia, the business, is going to be worth more in the future. And this is called fundamental analysis. Yeah, you're analyzing the fundamentals of the business. Okay. When a trader looks at Nvidia, they're asking completely different questions. Do you know, like that? Is the stock price going to go up or down in the next few hours or days? Right? What do the charts look like? Yeah, is there AI news coming out today that might move the price? Yeah, did some analysts just upgrade or downgrade the stock? Yeah, this is called technical analysis. You're analyzing price patterns and technical indicators on charts. Okay, they don't really care about Nvidia's long-term business prospects. Yeah, just as a quick demonstration, obviously these are charts. You can see that I got the exponential moving average at different time frames. You can have Bollinger Bands as well. If I want you to hide that and show that. You got Bollinger Bands, you got RSIs that you could use, relative strength indicator, size to load. Yeah. You don't want to load right now. Yeah. But there's different indicators that you can use. I might do a master course on technical analysis if the demand is there, but that's what they're looking for, right? And the thing is with technical analysis, it prices in all available information. Okay. But that's something for another that's a subject for another time in it. Okay. Right. So both approaches can work, okay, but they require completely different skills. It's like the difference between being a doctor and being a paramedic. Both work in healthcare, but they need totally different training. Now, good investors and good traders, right? They can use both. Okay. So yeah, they'll use both. Now, when it comes to investing, you actually have two main approaches to choose from. So if you decide investing sounds more appealing than trading, you've got two ways to go about it. Okay. Think of it like driving a car. Yeah. So you can drive a manual transmission or an automatic. Active investing is like driving manual. Okay. You're in control of every decision. You decide when to shift gears by picking individual companies like Tesla, Netflix, Microsoft, Meta, whichever one. Yeah, those are all like tech stocks, essentially. You get more control and potentially better performance, but you need to know what you're doing. You're constantly making decisions about when to buy, when to sell, which companies to research. Yeah, clutch control, like that. Yeah, passive investing is like driving automatic. Okay, the system handles most of the decisions you make. Yeah, well, they handle most of the decisions for you. You buy an index fund and it automatically gives you a tiny piece of like hundreds of companies all at once. Okay, it's easier, it requires less skill, and for most people, gets you where you want to go without all the complexity. Yeah, there's no stalling. Okay, plot twist though. Just like how most people are perfectly happy with automatic transmission and it works great for them, most professional fund managers who get paid like millions of dollars, millions of pounds to drive manual, yeah, can't beat the performance of just putting in automatic with an index fund. Yeah, they can't do it. Now, I know what a lot of you are thinking about. Yeah, what about crypto? This is like, you know, a channel for that. Okay. uh, Disruptive innovation and tech. Okay, so with crypto investing, okay, crypto is interesting because it can be either trading or investing, yeah, depending on how you approach it, right? If you're buying Bitcoin because you believe that in 10 years it's going to be widely used as a store of value, right? And you're planning to hold it regardless of price swings, that's investing. Okay, if you're buying crypto because you think the price is going to go up next week and you're planning to sell for a quick profit, then that's trading. Yeah, same asset, completely different approach. Okay, here's where it gets tricky, in it also really depends on which crypto you're talking about. So like Bitcoin has been around since 2009 and has survived multiple crashes. Okay, but there were tons of altcoins that were like super hot in 2017 and trending. Yeah, things like BitConnect, Verge, Tron. Yeah, that either completely disappeared or lost 95% of their value. All right. And just never recovered. Same thing happened with many in 2020. Do you know what I'm saying? Like they're not around anymore. Yeah. But the Terminator, they're not around. Okay. Here's a real example. If you had bought Bitcoin in 2020 when it was around 10K and just held it through all the ups and downs, you'd be pretty happy right now with it above 100K. Yeah, with it above 100K, you'd be laughing, right? But if you had bought some random altcoin that was trending on crypto Twitter there's a good chance it doesn't even exist anymore. Do you know like that? But timing's everything with crypto. Yeah. And this is something like most people get wrong. So crypto goes through these massive cycles, right? During bear markets, prices crash. Nobody's talking about crypto. Yeah, the media says it's dead, right? During bull markets, everyone and their grandma is talking about crypto. Prices are skyrocketing and FOMO is everywhere. Yeah. When you hear your grandma talking about crypto, it's probably time to get out. Yeah, it's a very, very hot right now. Yeah. Let me not say that actually. Yeah. Scratch that. Don't listen to that. I'm not gonna say it's time to get out. Yeah. But there's warning signs. Okay. Here's the counterintuitive part. Bear markets are actually the best time to invest if you believe in crypto in the long term. Yeah. In its potential. Everything's on sale. There's no hype, and you can accumulate without competition. And this is when real builders are building. Yeah. This is when real projects are working. Do you know like that? Yeah. Bull markets are the worst time to start because prices are inflated and everyone's just getting emotional about it. Okay. Now, there's an old saying, everyone's a genius in a bull market. Yeah, and it's true. What that means is when everything's going up, yeah, when numbers just go up, every crypto YouTuber looks like a genius in it. But it's really just the market conditions. It's not skill. Do you know like that? Yeah. So now whether you're trading or investing, there are some costs that can kill your returns, and it would be bad of me to not include this. It would be irresponsible of me not to highlight this, especially as an accountant. Okay, so I'm gonna go through this with you. So here's something that can destroy your returns without you even realizing it. Yeah, fees and costs. Now, every time you buy or sell an asset, okay, you might pay a commission. Okay, some platforms are free, but they make money in other ways. Yeah, that's like slightly worse prices on your trades that end up costing you. Okay, so things like spreads, yeah. Sorry, spreads, yeah. That's the difference between what someone's willing to buy an asset for and what someone's willing to sell an asset for. Yeah, when you're trading frequently, these small costs start adding up fast, right? And here's a big one: taxes. Okay, taxes in most countries, if you're trading frequently, you're facing higher tax rates than if you're investing long term. Okay. The exact rules will vary depending on where you live, like whether you're in the US, UK, Canada, or just anywhere else, right? But the principle is usually the same, right? Governments tend to reward long term investing with better tax treatment. Okay. You don't want the HMRC or the IRS sending you a bill and you can't pay it because you didn't account for it, right? Them and are evil. Like that. Like they'll let you spend the money, yeah, going around the board, then they send you a bill in it. They'll send you a bill and it'll be like, oh, you can't pay? Go directly to jail, do not pass go, do not collect £200. Like that? Yeah. Bottom line is that frequent trading means frequent costs, okay? And those costs compound against you, right? Just like investments returns compound for you, fees, yeah, frequent trading fees, those costs they compound against you. Like that. However, however, there's an even bigger trap, okay, that social media influencers love to promote, and it really grates on me, to be honest. Yeah, I can't lie, it annoys me, and that's leverage. Yeah, the leverage trap. You've probably seen ads or posts about leverage. Yeah, turn your £1,000 or your $1,000 into 10,000 with 10 times leverage. Okay, sounds amazing, isn't it? Okay, here's what they don't tell you: leverage multiplies your losses. Okay, just as much as your gains. Right? With a 10x leverage, if the stock moves 10% against you, you don't lose 10%. Do you know like that? You lose 100%, right? Your entire account is wiped out. Okay? And in volatile markets like crypto, 10% moves happen all the time. Do you understand? Like the people promoting leverage to small accounts are usually making money from using leverage. Okay, not from using it themselves, right? You'll have people that will tell you to join such and such an exchange, and they get paid commission on each of your trades. Do you know what I'm saying? Right? It's like a casino encouraging you to bet bigger. Yeah, it's not because they want you to win. Yeah, it's not because they want you to win more, right? So don't trade on leverage. Just don't do it, man. So it's getting dark now. So let me clear up some other myths that you may have heard. Yeah, let's bust some of these myths real quick. So number one, you don't need thousands of pounds to start investing anymore, right? Most brokers have zero minimums now. Okay, you can literally start with £1. Right? Second, about time in the market. This is more nuanced than most people make it sound. The general rule is time in market beats time in the market. Okay. And that's true for regular market conditions. Don't try and call the top or bottom of normal market movements. Yeah, you'll probably get it wrong and miss out on gains. Okay. But there are exceptional times like during the pandemic crash in March 2020 or the 2008 financial crisis. Not that you would have probably been around for that. Yeah, where it's pretty obvious that everything is on sale. Yeah, and if you have cash during those black swan events and you invest while everyone's panicking, you're probably going to do very well. Yeah. So the key is knowing the difference between obvious opportunities during major crashes versus trying to time regular ups and downs. Yeah. One is taking advantage of fear, the other is trying to predict the unpredictable. Do you know, like that? And here's a big one for people your age. Yeah. You don't need to take huge risks, yeah, just because you're young, right? I know you're tempted to do that because you think, oh, you got time to make that money back, right? But steady, consistent growth is how you actually build wealth. And like I said, like time is on your side, isn't it? Yeah. Just don't rush. No rush, man. Yeah. So if I've convinced you that investing might be the way to go, here's how you actually get started in it. Yeah. So before you invest a single pound, make sure you have some emergency money saved up. Yeah. And I'm talking like 9 to 12 months of your expenses in a regular savings account. Okay. This isn't for investing. Like this is for when your car breaks down or you lose your job. Do you know, like that? A lot of people live paycheck to paycheck. Yeah. Live paycheck to paycheck. Yeah. Rent still needs to be paid. Do you know, like that? You need to eat. Yeah, you need to get around. Okay. People usually say 3 to 6 months, but I say 9 to 12 months because three months goes fairly quick. 6 months goes fairly quick as well. Do you get? And you don't want to be in a position where it's approaching 2 months or it's approaching 5 months. You haven't found anything yet. And now you're just accepting anything. Yeah, because now you've run out of money. Yeah, you want to always be strategic about the opportunities that you take on. It's got to serve a long-term plan. Okay. Like you want to be able to have the comfort of knowing, okay, maybe this one's not right. Yeah, I'll wait for, let me evaluate all my options. And even if you want to pivot into like another field, yeah, that takes time to do. Okay. So let's say for rent, for instance, we're talking numbers. Rent, say you're paying at least a grand in rent, you need at least 12 grand saved up. Yeah. Now, it may seem like a lot of money, but it is a lot of money. But it's imperative that you have this emergency fund first because you don't want to be in a situation where you've invested and let's say, for instance, you're in year two, yeah, and you've lost your job, you've got no savings, you've got no emergency fund, and now you have to pull from your investment. Yeah. Your investment's in the red, it's in negative. Okay, but you gotta pay that out. You gotta pay the rent bill, right? You gotta draw out. You don't want to be in that position. Do you know, like that? That catches a lot of people out. And this goes back to time horizons. That 3 to 5 year period, you don't want to touch that money. You don't want to have to touch that money. Yeah, you want that locked away. Do you get? Now, once you have that safety net, yeah, you can start investing with as little as £25 to £50 per month. Yeah, I recommend starting with like a simple index fund. Yeah, through apps like Fidelity or Charles Schwab. Like you can even do it through a lot of your bank accounts now. To be fair, yeah, just set up automatic transfers so the money comes out of your bank automatically. Do you know, like that? And this will remove the temptation to spend it elsewhere. Do you get? Right. So the key is to make it boring and automatic. Yeah. The most successful investors I know rarely check their accounts and never try to time the market. Yeah. Just don't do it. Right. Now, if you're interested in trading, despite everything that I've said, if you're still interested in trading despite everything that I've said, then you know, please start paper trading. Please start with paper trading. Yeah, that's trading with fake money. Okay. Do this for at least 6 months. Yeah. If you can't make consistent profits with fake money, you definitely can't do it with real money. Yeah. Trading's not for you. Right. So if you do start trading with real money, never risk more than 1% of your account on any single trade. Okay. And here's the crucial part: have a written plan, yeah, for when you'll buy, when you'll sell for a profit, and when you'll cut your losses. Okay. Write it down before you enter the trade, right? This is where most traders destroy themselves. Okay. Let's say your plan is to sell when you're up 10%, right? The stock hits your target, you're up 10%, but then you think maybe it'll go to 15%. Yeah. So you don't sell, right? Then it goes down to 12%. Yeah. And you think, well, it's still higher than my original target. Okay. So that's okay. But then it drops down to 8%. Yeah. Then 5%. Then you're actually losing money on a trade that hit your original target. Do you know, like that? And this happens constantly in volatile markets. Yeah, like crypto. Do you get? Greed makes you move the goalposts. Okay, and you can end up losing money on trades that would have been winners, yeah, if you just stuck to your plan. Do you know, like that? That's why the plan has to be written down before you enter the trade. Okay, and you have to follow it no matter what. Do you know, like that? Yeah. But if trading is causing you stress, yeah, you're losing sleep or you're down money overall, just stop it. Yeah, it's not working. Yeah, stop, give up. Yeah, just pack it in. It's not for you. Yeah, just pack it in. Yeah. Now, you actually don't have to choose just one approach. To be fair, to be honest, here's what I actually recommend for most people. Yeah, and that's to do both. Okay, but in the right proportions. Okay, so you put 85 to 90% of your money in boring index fund investing. Okay, and if you want to scratch that trading itch, use 10 to 15% as your play money, yeah, for trading or crypto speculation. This way, you can learn about trading without risking your financial future. Okay, if your trading account goes to zero, you're still building wealth, yeah, with the majority of your money. Do you know, like that? And who knows, like maybe you'll be one of the few who actually succeeds at trading. Yeah, and I get it. Like trading is fun, yeah, and successful trades can be addictive. Like the rush that you get from a successful trade is amazing. You get like more so than winning at gambling, like because there's usually more skill that's involved. Like it's less pot luck, yeah, when comparing trading to gambling. Yeah, I remember when Dogecoin was on a run. Yeah, this was back in 2021, I believe it would have been, right? And Elon was backing it. Yeah, and most people expected it to go higher, right? As it was going on SNL at the time. So it opens up crypto to a wider audience, and everyone's expecting Elon to promote this. Okay, classic by the room and saw the news event, right? I thought I shorted that, yeah, with leverage. Yeah, I shorted that with leverage and made a lot of money. To be fair, obviously I lost it all on a future trade a couple of months later, but that's another story for another day in it. Yeah, but I've made racks and I've lost racks trading. Yeah, it's just the nature of the game, just all like that. So, all right. So, what are you actually going to do with this information that I've presented with you? Okay, I'll just say what I recommend you do, and you can choose to, you know, accept it, the advice, and move forward with it, or you can choose otherwise. Yeah. But what I recommend you do, figure out how much you can figure out how much money you can realistically save each month after your expenses. Yeah, you've got to be very honest about this. Yeah. Second, decide which approach appeals to you more. Yeah, for most people, I recommend starting with investing. Yeah, I know you guys like delayed gratification and want instant results, but trust me, investing is better, as I've said throughout. Do you know like that? And you have time on your side. Yeah. Third, download one of these investing apps. Yeah, I'll leave a link in the description and just explore it. I also do video on these investing apps as well. I'll do a tutorial. If you want that, don't put money in just yet. Just get familiar with how it works. And finally, just keep learning. Yeah. Keep learning. Right. And this video is just the beginning. I will be doing more videos. Do you know like that? Yeah. And obviously set up automatic transfers if you are investing. You want to average dollar cost average your way in. Yeah. So let me just leave you with a few key points to remember. Yeah. Here's what I want you to take away from this today. Your age is your superpower. Right? You have something that millionaires would pay anything for. Yeah, and that's time. Don't waste it. Do you know like that? Consistency beats perfection every time. Right? Every single time. It's better to invest £25 every month for 5 years than to wait until you have 1,500, yeah, perfect amount to invest all at once. And this is what I'm saying. Like, you're also averaging your way into the market. Yeah, dollar cost averaging. I'll do a separate video on it. Okay. Education comes before speculation, right? Learn before you leap. And most importantly, your future self is going to thank you. Okay. It's going to thank you for starting today rather than waiting until tomorrow. Yeah. Now, if this helped you understand the difference between investing and trading, then obviously please hit that subscribe button and let me know in the comments, are you more interested in investing in the investing route, or does trading still appeal to you? Yeah, and I will do more content on trading. Yeah, like I read every comment and I'd love to hear your thoughts on it. Okay, so like I said, if you found this useful also, then do share it with a friend as well. Yeah, as well. So yeah, that's it. Thanks for watching, and I'll see you on the next one. Yeah, hopefully it won't be too long of a gap this time. Yeah. Pell Block 101, home of value investing in disruptive innovation and tech. That's it. Bless.